week. I got a couple things right, a couple things wrong. Starting off with the dollar. Was right to call this pullback. Thought we'd get a continuation. Instead, the market continued to move up. Looks to me, which helped us on our cover of the Canadian shorts and reverse at 27.70, and also helped us with the short on the Aussie at resistance, and would have been minus 20 to 40 pips if you'd taken the buy in the euro around 14 to 13.80. So here we are. We have an inside day today. There still is potential for the market to head up to this resistance level. The bulls will say that we'll probably develop from up here. This low was pretty important, significant at 95.5. If we get up here, they're going to start talking about a potential head and shoulders bottom, with this being the left shoulder. For a right shoulder, the bears are going to say, and the bulls are Goldman. So Goldman's looking for 105. Everyone pretty convinced that the low is in. We were fortunate enough to forecast a bottom. I didn't know if it would be the bottom or a bottom the day before the turn at this 92 level, and caught the short side in the pound and some other good trades. A lot of people are saying this could be it. I'm going to keep an open mind. The fact that there still could be one more washout in the dollar, one more push up in the yen. In fact, the pound's starting to look okay to me too. We have a falling wedge to talk about. US dollar yen is sideways. I mean, I haven't seen it this sideways in a while. To me, that's a non-trade. I'd rather short it higher than just launch. So I have nothing setting up there. And some interesting action we're starting to get at important support on some of our campaign trade ideas, and the Aussie Kiwi. We'll go over that as well. But for now, what I'm thinking is that perhaps there's one more push up towards this neckline above 95, 95.5, which could still give us lower euro numbers. Euro's not diverging down here, and I think there's a chance we see the low 112 handle level, which then might be, at least for a trade, a pop. And the bears will say that there's still one more launch. Dollar bears would say there's still one more launch in the euro to take us back up to above that 116 low. Give me a Y if you're with me. So we're going to look for a bit more of a continuation. Maybe this is drive 1, maybe this is drive 2, and perhaps we get a 3 up here. S&P's had a pretty negative week, led by NASDAQ. I was talking about eventually I thought we'd get down to 1960, 1970. It's very possible that we completed something here. Really didn't give up much ground. Now perhaps we're going to have a blow off. Again, there's a lot of confusion as to whether or not the market wants a strong dollar for continued inflows into US dollar denominated assets, or a weak dollar to put some fire under the reflation trade. Crude's up again. So with crude up again, I still think there could be some type of top developing for a correction, although you have a lot more bulls now than you did when I liked it under 30. Some people even talking 85 bucks by the end of the year. That's going to take some type of geo disruption of oil supplies, like what's happening in the meltdown in Venezuela, threats of the Straits of Hormuz being closed. It's going to take something like that. Maybe a major oil facility or some instability in Saudi Arabia. So there are a lot of pots boiling on the stove for crude. Let's take a look at it. And we'll take another look on the real-time platform. Here's your crude oil market. So I talked about one more blow off in the crude, which was going to set up that pullback in Canada, which we got to the 27.5 level. I said cover at 27.70 from over the 130 level. So let's take a look at July. amazing how quickly the world can change from people talking $20 crude, 17 crude. So actually, the Canada holding up pretty well. We continue to diverge. This was the blow off I talked about, and then we have this pullback. Now we're heading back up again, but again, a non-confirmation. I have an RSI reading of 65 at the last peak, 65. So even at new highs, we're not confirming. And in fact, I recall a long time ago, I had a falling wedge that was anchored at about the 50 to 52 range. And wedges can retrace 100%, so we're also approaching that. To me, this looks like it's setting up for the potential of USD CAD to still have some more upside. I'm looking for at least 31.5 to 33. The cover at 27.70 on the short and reverse was good. We'll take a look at that in a little while. We're having some wild action today in the gold market. Opened sharply higher, still not able to pierce that $1,300 psychological level. As you can see, we were sharply higher early in the session, and we've come off these highs a bit. I'm going to remain patient. Now I would like to see this accelerate up to 1320 to set up a short in gold, setting up a short in Aussie should we get up there. So the commodity currencies I was right about gave a good short entry on Aussie. That's working. We're not quite at a buy point where I want to get long in Aussie, but that could be coming up with USD CAD trading above 131. Here's a quick look at the treasuries, which are down today, which should be supportive for the US dollar. The TLT is a 20-year treasury, Barclays. So still range bound, you know, looks like anything can happen. So just like the yen is range bound, I'd say treasuries are range bound. I'm looking for perhaps one more blow off to the upside in the treasuries, and not convinced that that low in the yen was it for this cycle. So give me a Y if you're with me on my correlation work, correlating what's happening in USD CAD with the oil, the gold with the Aussie, US dollar yen with S&Ps and treasuries. Everyone with me? Give me a Y if you are. Okay, let's get to our individual instruments now. So we always start off with the Euro USD. I'll just take you back in history on Wednesday. When we were here, I said attempt buys on this wedge line at 1380. Be wrong under these lows under 1350. So that trade did not work out. The way it looks to me now is that we could possibly see the 112 handle again. I have no divergence here on the 1 hour. So I'll be looking at the potential once we're down in the mid to low 12 region on the euro to see if there's potential for it to stay above 30, but no divergence here. So you could go with the flow, be wrong over 1380, looking for anywhere from 1250 to 1204 in Euro USD. Give me a Y if you're with me. I think the only thing that would change the picture would be getting back above the pivot at 114. So to me, it looks like under 113 and below 112s look like destiny to me, based upon my RSI work, based upon the fact that this first pullback didn't hold after we had divergences, and the fact that perhaps the dollar index could trade 95, 95.5 before the sell-off. So what the bulls are looking for is one more shot down. They're calling this a wave 4. And a very contrarian stance. If this could be a 4, which implies there could be one more drive to the upside. Actually, the RSI supports this. So thinking there's one more jiggle to the downside, maybe as low as the 112 range. You have a 3-drive line right here. And then we could get the dollar bid coming off Actually, the pound looks better to me. It probably favors, in fact, despite the Brexit, right here, I think the pound could be sold with stops over 144.40. I still think that if you look at this neckline that people were paying attention to on the 4-hour, off this formation, I have some confluence coming in down here in the low 143 range. I think that there's still a possibility when I go to the 1 hour that we've only had 2 drives. Here you go. There's 1, here's 2, getting kind of overbought here. So between here and 430 could be a decent set. The stops over 144.5, 145, looking for one more shot down towards the 43.20, maybe even take out the big round number of 42.80 before we get something bigger. But again, having the look of a falling wedge at the highs, we were confirming the highs. So perhaps one with the dollar, with the euro, one more jiggle to the downside and then fade dollar strength. Looking at this as a falling wedge with a couple of 3 drive lines with confluence. Here's drive 1, here's drive 2. So for me, the pattern looks incomplete until we get down and take out this low. With this type of RSI reading that we've had, being a betting man, I'd say even if we take out these lows, the RSI will be above 30 for the second time. So that's the way it looks to me. And if you look at this being a falling wedge, once we break out over this 145 level, when you look at the daily, you have potential up around this 149, 150 level up here. Everyone see this at the target range? So this may have been it, but I'm trying to think maybe we get one more shot down and then we rally, take out the highs, and this was a high that we caught on the Dixie at 90, at the 92 level, short from 770. And last week I had no long recommendations. There was a nice little short here. This is actually a decent looking day. Sometimes it isn't 3 drives, sometimes it's 2 is enough. And I'm thinking that there could be one more before this market turns off. It's going to have to close back above 4.5 for me to rule it out. Then over 4.5, we're headed towards a 5.5 wedge breakout. Give me a Y if you're with me. So, you know, the big trade was a week or so ago when everyone was bearish the dollar, getting bullish the dollar. These are a little less, I call them not as, you know, not an inflection point. So we're just trying to navigate things and be right for 100, 150 pips on the European currencies, the pound and the euro. There's actually clearer technicals in the commodity currencies. I'll get to those in a bit. But best guess is one more shot down in euro, down towards this low 112 range, and then we could have a huge rally. So similar situation in the pound, that perhaps we get one more shot down in the pound. We've had 2 drives, maybe we get one more. That's going to set up a pretty good buying opportunity in my view. If you want to short the pound, looks to me the weakness is now turned into the euro. When you look at EG, we have this break from 79.10, and this looks much more directional. So euro pound for now looks down, so your preferred short is the euro over the pound. And the euro, just looking at the 1 hour, displays a lot more relative weakness. We have a confirmed low here in the euro, and this last low diverged in the pound. So when you look at the 2 of them, the pound is displaying more relative strength. You look at the same setup. This low right here diverged, so we're already beginning to diverge in the pound. Not yet in the euro. potentially down in the 112 range. That can happen. Not saying that we can't continue to rally here, but I think between here and 1350, 1380, we're going to find some issues in the market and take it down one more time. There's nothing to tell me that we have a good bottom in the euro. There's at least an inkling in the pound with this divergence that we have right here. And as I was saying earlier, the yen is completely sideways for days now, for days. And to me, if I'm right about dollar pushing up one more time, still think that we could get up. We're having some trouble up here at the 61.8 level. Maybe we try the 70 or 76 level up here. I'd still like to see one more push up above the 61.8 level to consider shorts. So that's where I'd be interested in getting short. Above these highs, looks like we have a little 3 drive developing here, but I'd really like to see one more push up. In the end, you have a 50-day moving average up here around that 76, a little over 110 would be a nice shorting zone for me. The stops over 112, looking for one more low. Maybe this is drive 1, drive 2, and we get drive 3 under previous lows, takes us under the 104 handle. Give me Y if you're with me on US dollar yen. Any questions so far? So basically looking for another jiggle to the upside in the dollar to fade, to at least correct this recent advance that we've had in the dollar. So that includes euro heading down under the 113 level again, possibly to the low 112s. And the pound possibly giving us another shot in the low 143s to 280 zone. Right now, the yen is no trade. I'd rather look at being a seller up here around the 76.4 level of 110.37. So that's about 100 pips up there. And euro pounds acting kind of heavy here. Doesn't mean that we won't have another big rally in euro pound, but for now, this sideways action, somewhat negative. To me, it looks corrective, but it could correct some more, maybe even down towards 78-ish to correct this recent bounce that we had from 77. So far, failing at the 50% level, and now I think that we're going to correct some more, and then perhaps head up towards the 61.8 level after this break completes. So at this point of time on Monday, the euro is your preferred short on strength, and your pound is your preferred buy on weakness. Although I think they both could head lower. But the euro showing more relative strength, structure, weakness, and the pound is your preferred short on strength. Give me a Y if you're with me. So this one we got right 3 times in a row. So I forecasted the buy between 24.70, 24.5. I had people getting out in here after a 400 pip run, and then last week I said I believe that crude could pop and we'll get some type of pullback. And then on Wednesday I said look to cover it around 27.70 if you want to reverse. That would be fine. We're either going to have an A, so this trade was good, and then to cover here, and if you went with it, it was good for another almost 180 pips to the upside. So I see 2 scenarios. If crude continues higher, perhaps we still get one more. This could be A down here, B, and we get a C down here to 27.5. But the bigger picture to me is retrace potential in Canada. I think we're going to see it above this high, towards the 31.5 to 33 range. So I'd be in favor of buying a break here if we retested this support at 27.5, and I think we're going to rally up towards between 31.5 to 33 in what would be a bear market rally retracement move here in USD CAD. So the last 3 trades were pretty clear to me. This one not as much. So this was a winner. This was a winner. This was a winner. This was your cover and reverse. And this is a winner. Right here, you know, just a normal little pullback here. We don't have to retest it. The other scenario is that we had this A, and now we're going to get A, B, C from here, and not even come close to these lows, head up towards the 131 to 33 level. That's going to imply that crude is getting close to a top, and also imply some more dollar strength. Give me a Y if you're with me on that one. So the best trade of the month was the call on the Canadian dollar down here. And now it's getting a little messier, you know, since this big move, chop, chop, chop. So we're just trying to finesse both sides. We caught the pullback, you got the pop. 27.5, we'll see what happens in this range. But I don't think that before we trade above 130 towards 31.5, 32, 33, that we're going to head straight down and break until that happens. Give me a Y if you're with me. Which takes us to the Aussie. And last week I said look to sell a rally. It was up around the 74 level, so that worked. Okay, worked pretty good. So my accuracy and the clarity is a little better on the commodity currencies right now than on the European currencies. So this was a nice trade based upon the recommendation from last week at the 74 level. And you know, when if you want to go back and just review, it was down here. I said to cover. I drew this line in here that old support could become new resistance, and it looks to me just like I think Canada can push up, that there's one more shot down towards the 72 region. 61 back of the whole advance is 72. So in my view, I think Canada has some downside left down towards 72. It's done nothing right. What kind of low is this? So you sell rallies between here and 73.20, looking for new lows down towards 72.20 to 72. And at that point, we're looking at 61.8% retrace, and that could actually end up being a decent buying opportunity, because we're talking macro here on the daily. 72.03, 61.8 back between there and 76. Now we'll be entering some zones for potential buy in Aussie, or at least a rally back to the breakdown to 75.5, 76. Give me a walk with me on this. So the Euro CAD, something I was talking about, I thought we'd get at least a rally up towards, I'm actually looking for 157, so that we get a right shoulder here. Is your daily? Where's your weekly? Okay. Left shoulder, head, looking for a right shoulder. If we have 70 here, it's going to be up around this 55 region. Almost looks to me like here's your neckline at 150. Here's your head. We're not at the neckline, but I would favor with Euro possibly breaking down towards that 112 region. I think the 145 level, 144.5, is a decent shot for perhaps this is 1, and we get a 2 or a B, and then a C back to the upside. When I look at it on a shorter term time frame, that looks to where it's heading down here. down towards this 45 level, as I showed you on the macro, and that's going to be a nice big retracement. So with looking for, after one more push up in the dollar, down in the euro, I think there could be a nice shot here at the 145, 44 and a half on the long side. I think we're headed down to this level, that's going to be a magnet. And then I think we have potential to rally to above the 150 level and possibly as high as the 157 level if you look at the daily. If I call this a left shoulder, and we never really quite got down to this support at 140, maybe we will to get a neckline. That's the other scenario. Closes under 144 could set up a third drive. But the big position trade, I think, happens from much higher levels. Because eventually we take out this 142 level, we're talking 124 handles. So here's another look at the crude. Doesn't look quite done yet. This was the pop that I called. It took Canada down. Canada's actually holding up okay. Graphs were headed to 49. 49 and a half, really no divergence. I thought we would diverge. We are on the 4-hour time frame, but I like to have the 1 hour line up with the 4. Even the 4 is breaking up. No sign of a top here. Looks like we're in a blow-off move. So if Canada can hold up with the crude going up like here, and it's really not down much, hasn't given up much of its gains. It's kind of a market tell that there's still has to be an unwind of this big decline in Canada to take us above the 130 level towards 31.5 to 33. And here's the gold. Gold showing more weakness in the crude. Some willing sellers up here in the crude and in the gold at the opening. I'm still trying to be patient. Targets are changing down here towards 62. That may have been it. We'll get a lot of, this is not a new high. This could just be a little ABC here, and now we're headed down, which also lines up with the Aussie heading lower. So both gold and Aussie are in sync. I'll go with the Aussie trade for now, and still think that I'm going to have a chance to get short gold over this this high here. So it looks ugly today, could be breaking down on its way down to correct this huge advance. If it goes without me. Here's your daily. Under 1250, it's going to be very vulnerable for a move back down towards 1180. Here's your line in the sand, in the gold for gold bulls. Back on, closes under 1250 is going to set up a move to 1200. Possibly back towards this halfway mark at 1170, 61.8 back at 1140. Give me a Y if you're with me. And a couple other of the campaign trades I'm keeping an eye on. It's Euro Aussie. We have this big descending triangle here, and eventually I'm looking for some type of breakdown. Although if we get over 160, that's going to negate the formation. Here we are right around the 61.8 level on the daily. Still no reason to sell it here that I can see. So we're going to see what happens up here at this 157 level. Again, a lot of sideways action in the market. And what that tells you is wait for spikes. Wait for, say, where are the stops? Well, there's stops over 156. And there are stops under 154.70. Let the black boxes play the games. We want to see what happens when they take out the stops above 156. So again, we're now starting to approach this larger formation. Here's your weekly of a descending triangle. So we could get to the triangle line. It could be 58-ish, but eventually I'm looking for a resolution back down to the downside. And then we want to take a quick look at Kiwi because of our view on Aussie Kiwi. Actually, Kiwi still looks a little better than the Aussie, but we're approaching some pretty interesting areas now here in the Aussie Kiwi. Last week I was talking about getting a 3-driver down here, and we've had 3 drives. But I would be taking a look at the Aussie Kiwi at this 106 level. Here's your 4-hour. We are beginning to diverge. The lead will stay above 30 even if we trade down towards this 106 level. And then here's your daily. Still think that perhaps we're forming this right shoulder. The only thing that bothers me is the gap that we had, and that was based upon what happened in the Aussie and cutting rate. So we'll see what happens at this 106 level. That could be a buy point. So just a quick review. Looking for one more shot down in euro, down towards this 112.50 to 112 area. Have a couple of 3 drives looking for a divergence if that happens. Pound, I'd like one more shot down. It's already diverging. It's ahead in RSI cycles, ahead of the euro. Like to see one more shot down towards the low 43s to 280, and then looking for the possibility of breaking out of this upside triangle. We're still a month away from the Brexit vote, over a month away. So I'm thinking there's a possibility that they drive the pound up into the Brexit and set up shorting opportunities. You would think that they would drive it down, sell the rumor, buy the fact. Perhaps people are just going to drive it up thinking there is going to be no Brexit. Then the surprise would be, especially if we're up around 149, 150, of looking to short the pound back at those levels. Again, the yen is setting up a no trade until we get above 110. And we'll leave it alone. Canada, we nailed 3 turns in a row. Still think that there's potential for us to head above this 131 level towards 31.5 to 33. And Aussie still looks heavy to me, although it's having a decent day today. Still think that we could head down into Aussie. Sell rallies between here and 320 with stops over 370, looking for 72.20. Any questions on anything I've covered here today? Kind of a quiet pre-summer session, not a lot of news. Basically looking at the dollar to have a little bit more on the upside and then correct its recent bounce. Any instruments I haven't covered that you'd like my view on? Okay, trade light, be patient, let the markets come to you, look at your charts and go, where are the stops? Let those stops be taken out. How do you know where the stops are? By looking at a chart and saying, if I was long, where would I put my sell stop? If I was short, where would I put my buy stop? And you could count on that you wouldn't be the only one putting stops at those swing highs, swing lows. Good hunting in the meantime. I'll be back with you on Wednesday. Thank you for your attention. Thank you, RoboForex.